So today we're going to take a dive into some of the most frequently asked questions by first-time homebuyers. This is a pretty good list, so it may be a little bit longer of a video, but I think it's super important that you hear the answers to these because many, many times there are misconceptions from first-time homebuyers on buying their home. My name's Miles Pitcher. We've helped thousands of first-time homebuyers get into their homes. So let's dive into it. Okay, what qualifies as a first-time homebuyer? Obviously, someone who hasn't bought a home yet. But if you haven't owned a home in the last 3 years, you are now considered a first-time homebuyer. Do I need to be completely debt-free before buying a home? No, you don't. It's nice if you are, but no, you don't. What we do is we measure a debt ratio, which says what percentage of your income, your gross income, is going to pay the monthly payments on your current debt plus your new mortgage. And we look at that and make sure it fits guidelines. And we can get you more info on that. How much money do I need to buy a house? So there are zero down loans. Some are favorable, some are not, but typically anywhere from 3 to 5% of down payment is the sweet spot. And then closing costs can be anywhere from, I would say, 1.5 to 2.5% on closing costs. You may ask the seller to cover your closing costs, or you may have to pay those out of pocket. But you have two different things that you have to deal with. Number one is your down payment, and number two is your closing costs. Yep. Okay, what's the difference between a pre-qualification and a pre-approval? Pre-qualification is just info that you've passed to your lender, unverified, unsupported, and we say, great, yep, it looks like you're pre-qualified. Pre-approval means we've collected your documents, we've done at least a soft credit pull, and then there's even one further step where we run it through an automated underwrite system and verify that you are approved on there. Being a pre-approval is a much better and makes your offer stronger when you're offering on a home. How long does it take? I would say this says 30 to 45 days. I would actually say that from when, and that's probably right if you're going pre-approval to closing. From when you find the home, you go under contract to when you actually close and get the keys to the home, that's going to be 25 to 30 days. How long it takes you to shop and find the right home can be very different for each person. What credit score do I need to qualify? The lowest I would say is 580 to 620. However, 640 plus is better. We have seen the average credit score of people, thanks to things like Credit Karma and credit cards that show your credit score. We've seen those credit scores on average get higher and higher and higher. I would say anything 740 plus is kind of your A plus. Yeah. Okay. Can I buy a home with student loans? Student loans are a debt. Even if you are still in school, even if your student loans are in deferment, most of the time we will have to count a payment for those student loans, even in your debt ratio, even though you aren't making payments on those yet. There are a couple of exceptions, but there are ways we can work through and deal with the student loans. Self-employed. So typically you're going to need 2 years history of that self-employment. There are a few minor exceptions, but all in all, you need to plan for 2 years. We have clients here and there who leave their W-2 job and say, I'm going to go self-employed, and they may be making great money in that new job, but they have to wait till they have 2 years and the tax returns to go along with it to be able to qualify. What kind of incomes count towards qualifying? So obviously salaries, hourly paid, bonuses, commissions, overtime, part-time jobs, retirement income, alimony, child support, rental income, and government benefits. And I would also add in trust income. The key words that the lender is looking for is stable and documented on there. And there's a likelihood for those sources of income to continue for at least 3 years. Do I need a 20% down payment? No, you do not. In fact, if you wait to save up 20%, home prices are probably going to be a lot more by the time you save that up. So I do believe it's better to get into a home once you have 3.5%, or even 5% down. If you are eligible for a veterans loan, a VA loan, you don't need any down payment, 0% down. USDA loans are also 0% down. Down payment assistance. So there's a wide variety of what's available here, from down payment loans to down payment forgivable grants. And it often depends on where you live, how much money you make, because sometimes there's income limits, but you just need to talk to a mortgage broker and find out what's available to you. Generally speaking, if you can save up a down payment, you are going to be better off than taking the down payment assistance. Can I use gift money for down payment? Absolutely. Close family friends can gift you the money for down payment. We see this more and more coming from parents helping their kids to get into a home. Please talk to your mortgage broker before you start moving funds around and doing that. There's an easy way to do this, and then there is a hard way to do it. I shouldn't say hard way. There's a way that is less paper trailing and documenting, and then there's a way where you need a lot of bank statements and things to verify the funds. What type of home loans are available to first-time home buyers? All the standard loans are available. FHA, VA, USDA, conventional loans. Those are all available to first-time home buyers. It just is going to depend on your scenario, your credit score, your down payment, your debt ratios, onto which one is going to be the very best for you. Mortgage insurance. There are two types of mortgage insurance. There is private mortgage insurance, which goes on conventional loans. And then there is FHA, mortgage insurance premiums. And each of these have different nuances, but anytime you put down less than 20%, unless you're doing a VA loan, you are going to have to deal with this mortgage insurance. And I know it gets a bad rap, but without it, lenders would not loan to you more than 80% of the purchase price. Because we have this mortgage insurance, now lenders will go all the way up to 95, even 97%, sometimes even 100% on these loans. So the insurance protects the lender. You get to pay for it. The higher your credit score is, the lower your mortgage insurance is going to be. And that's really, especially in the private mortgage insurance, your credit score and how much down payment you do will help on getting lower PMI amounts. But just make sure you talk to a mortgage broker, because mortgage insurance may be less than you think it is. And it's essential. Without it, like I said, you would have to have 20% down. What happens after my offer is accepted? So hopefully by the time you're offering on homes, you have a pre-approval from your lender. We have all your documents gathered. At that point, the lender, we are starting on underwriting with your file. At the same time, you are going to work with your real estate agent on getting first a home inspection done. And once it passes the home inspection, then we will do an appraisal. And the title company will also provide a title report on things. I'll put a link to a video here that gives you the whole home buying process overview. in a really condensed nutshell. Closing costs. So closing costs on a loan are essential. Every loan has them. If a lender says, "Oh, there's no closing costs on this loan," it just means that um, they're they are there, but somebody else is paying them, whether it's a credit from the lender, a credit from the seller, a credit from the builder to cover those. But you should get a very nice detailed loan estimate that gives you a list of all the closing costs, which could include appraisal, underwriting, title fees. Um, let's see what else, insurance fees, um, HOA fees. And then there's another part that we call prepaids or escrows, and that's going to include your property taxes and homeowners insurance. And those all get lumped into the closing cost section. I typically see them 1.5% to 2.5% of the purchase price. The higher the purchase price, the lower the percentage of those. Who pays the real estate agent? So this is a change that's happened in the last little bit, is that with the new realtor commission laws, they have made it clearer, and your realtor should talk to you about who is going to pay them. Typically, and this is just typically, it's not guaranteed, your buyer's agent, the realtor you hire, and we highly, highly recommend that you use an experienced realtor, they will be paid by the seller. So that is not something that comes out of your pocket. That's all been priced into and factored in by the homeowner selling the home and their seller's agent, seller's realtor. There are unique situations where you as a buyer may have to pay your buyer's agent, but generally speaking, at least the market here where I'm at in Utah and every other market I hear about, the buyer's agent is being paid by the seller of the property. Can I buy a home with someone else? Yeah, so this means co-borrower. So you can buy with a spouse, partner, friend, relative. What we do is we take the whole financial picture for the borrowers and combine them together and figure out what our debt ratios look like. There are times that we have parents who are co-signing on loans, meaning they don't live in the property, but they will co-sign with you on the loan. And there are some, it's a good way to go. There's some things we like to cover in there and make sure that there's a plan for the future to get the co-signer refinanced off the loan down the road. How long do I need to be at my job to qualify? So we need to see a 2-year work history. Schooling can count in that if you got a degree. Part-time jobs count in filling that 2-year history. But we love to see full-time work, stable work, and that is going to continue for at least 3 years. So if you've just picked up a brand new job that's full-time, whether it's hourly or salaried, many times we can use those pay stubs, within 30 days. And oftentimes, if we have a client who has a contract to start a new salaried job, we can count the income of that new job even before the client has started the new job. Pretty cool to be able to do that. If you are part-time and talk to a lender. There's some nuances with self-employment and part-time. If you're 1099 or have variable income, please talk to us on that. Well, if my credit score is low, so we have been able to get loans done all the way down to 500 credit scores. I would say 500 to 580, you need to plan on having a larger down payment, and we need to take a close look at what's caused your scores to be so low. 580 to 620, we can do with 3.5% down. 620, 640 and higher, no problem. We can get those there. If your score is low, please visit with a lender so that we can help you build a roadmap to home ownership. It may include some credit repair things. We may have some tips that we can help you with. If you need serious credit repair, we have some great companies we work with who can help guide you and help boost those scores up. Escrow account. So this word gets thrown around a lot. In mortgages, an escrow account is a special savings account that the lender has. Once you buy your home and you're making monthly mortgage payments, you will most likely be paying part of your property tax, 1/12 of it, and your homeowner's insurance, 1/12 of it, in with your monthly payment every single month. The lender takes that property tax money and homeowner's insurance or fire insurance money and puts it over in an escrow account. And then when your property tax bill comes due, it's time to pay property taxes, they will take the money out of that escrow account or special savings account and pay that for you. The lenders like to do this because they want to make sure property taxes, homeowners insurance are paid. Back in pre-2008, there were a lot of lenders who got burned when the recession hit and homeowners stopped making those payments. So now escrow accounts are pretty much standard. The lenders don't necessarily mandate that you have to have them. However, they may penalize your interest rate if you don't have one. So they absolutely do reward you for having an escrow account. And frankly, it makes it very, very easy for them to take care of those taxes and insurance for you. Well, if I don't have a lot of credit history, yeah. So oftentimes we'll run into clients that have never had a credit card. They have zero credit. We call them credit invisible. There are loans available for credit invisible people. If you have a credit score, great. We have options, and maybe we need to improve a credit score. But credit invisible, there are some things that we can do, and I'll post a video here on credit invisible, how to get your first credit score. How much do I know how much home I can afford? So again, this comes down to credit score, down payment, and your debt ratios. And that's where it's essential that you talk to a lender and get this figured out on not only how much you can qualify for, but where are you comfortable on that monthly payment? We don't want you moving into a home and feeling house poor. When is my first mortgage payment due? So let's say that you close on your mortgage on July 25th. Okay. That means that as you come up to August 1st, that's already been covered in the closing. So you won't make a payment on August 1st. Your first payment will actually be September 1st and every month after that. So you'll hear people saying, oh, you get to skip a payment when you get a mortgage or you refinance. The proper way of saying it is that payment has already been covered in the closing. So yes, you don't have to actually write out a check or pay that first month, or you do get to skip that payment. Can I refinance my mortgage later? Absolutely. Very rarely are there any mortgages that have prepayment penalties. We like to look at refinances, help our clients see if they make sense, save some money for you. Do the refinances to where the closing costs are not being hit to you. They're being taken care of with credits from us. But it's important when you do a refinance that we look and measure and see, is it worth it? What is the break even on the refinance? Is it going to save you some money? Because there are some costs with doing a refinance. But yes, very much worth it to look at those. All right. If you have any questions or I missed any of these, please feel free to reach out. Here's how you can get a hold of me, my team. We love helping first-time home buyers. Have a good one.